Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. It's been 100 days since President Lee Jae Myung took office, and the economic scoreboard is drawing both praise and scrutiny. His administration launched with bold promises to revive everyday livelihoods and jumpstart a sluggish economy. Since then, South Korea has seen a rebound in GDP growth, record highs in the stock market, and a headline-making tariff deal with the United States. But challenges still remain. Consumer confidence is still fragile, the national debt continues to rise, and questions persist about the long-term effectiveness of expansionary policies. As Korea navigates uncertain global headwinds and domestic pressures, tonight we take a closer look at how far the Lee administration has come and how far it has to go. To help us break this down, we're joined by Shin Se-don, professor at the Division of Business Economics at Sookmyung Women's University. A big welcome.
Good evening.
And also joining us is Song Soo-young, professor of Business and Economics at Chungang University. Good to see you, Professor.
Yeah, good to see you, and thank you for having me here.
So let's begin our discussion right away with Professor Shin. So President Lee Jae Myung launched his administration with reviving livelihoods and revitalizing the economy as a top priority. So in your view, what are the most notable economic achievements from the past 100 days?
Well, 100 days is not such a great number, but for the first 100 days, I think economic figures and data seem pretty good so far. I think most important achievement, as far as I'm concerned, is Economic Emergency Response Task Force, which was ordered, which was a presidential, I think, first executive order of the President Lee Jae Myung. And in that, I think they have second supplementary budget of the 35 trillion won, which includes individual consumption support coupons by the amount of 13 trillion, and revitalization of construction industry, in which about 1.6 trillion was dedicated, and also debt restructuring for the small businesses by the amount of 1.4 trillion. So altogether, total expenditure will be about a little more than 20 trillion won. I think that is the most impressive kind of achievement of the President Lee Jae Myung so far.
Right. So those positive results really set the tone for what would come next. Now, building on that, South Korea's GDP actually grew by 0.7% in the second quarter, bouncing back from the negative growth in the first quarter. Professor Song, to what extent can this be actually attributed to President Lee's economic policies?
Yeah, Professor Shin has mentioned some role of the presidential offices and newly appointed ministers' emergence team's effort and to reinvigorate the economy plays an important role. But I believe more than that, what President Lee has contributed to the recovery of the Korean economy right now, as is shown in the index and the other GDP growth rate number figures, are because President Lee has recovered Korean people's confidence. So I would like to emphasize the role of behavioral aspect, because the Korean people has regained confidence about our economy, and we can make the economy grow again under the President Lee. That is the most important one. And also that is clearly reflected in the GDP growth rate, the second quarter, 0.7% in 2025. So as I look back at the data that was shown in Bank of Korea, we have experienced the year-on-year, the seasonally adjusted year-on-year quarter growth rate first quarter is 0%. So even considering the base effect of the Korean economy due to some emergency martial law and then bad performance in the 2024 under the ex-president Yoon, primarily the current recovery situation of the Korean economy due to the base effect, but I would like to say some psychological and consumer sentiment has been recovered under the newly elected Lee Jae Myung's administration is most important part right now.
Right, definitely. It seems as though regaining confidence on economic recovery would be very big and good to pick on. Now turning to consumption trends. Just yesterday, President Lee highlighted in his 100-day press conference that rapid supplementary budgeting and consumer recovery coupons are driving an uptick in consumer sentiment and other indicators as well. But some people still argue that real consumption remains limited. What's your thoughts on this, Professor Shin?
Well, we can't deny, the month of June and July consumption data has shown pretty impressive pickup. And that is due to the kind of a positive confidence by the people of Korea. But that just, is consumer sentiment. Consumer sentiment is one thing, and the real increase in consumption is another. We have to wait until the month figure for September, August, September, and October, whether the real consumption coupon is working. So it is premature to judge that everything the President Lee has done for the first 100 days is 100% success, because we haven't had real data of the consumption coupon. So I recommend people to wait until the end of September or probably October to see whether consumption, the support coupons are working. So I rather kind of really be careful about judging, the performances of President Lee's administration. We cannot deny that so far the first round effect of building the confidence is okay, but it's premature to judge that everything is all right.
Right, exactly. So even if indicators are up, the gap between sentiment and actual spending is still something policymakers should keep a close eye on. Now, let's also touch upon financial markets, Professor Song. The Kospi broke past the 3,300 mark, hitting an all-time high. How would you read into the stock market rally around this 100-day milestone?
Yeah, there was recent surge of Kospi index, and particularly in emerging market and in Asian stock market rally has not just limited Korean market. Also in Nikkei and the other Asian market has enjoyed inflow of the foreign investors, particularly from maybe USA, because the USA, they have shown weakness in the employment rate, and also there is a huge revision of the past year's employment growth rate. So that indicates the U.S. economy is on the verge of maybe some kind of start of the recession, or the economy is not anymore growing as was expected in the past. So on the other hand, there is a slight change inflation rate, which has been fixed in 2.9% in the U.S., but still the U.S. investors actually they believe in Asian market would be much better place to make an investment. But when I look back, particularly for the Korean Kospi index and the Kospi Korea data, actually the foreign investors' share of Kospi and Korean stock market has relatively remained very stable over between the 28% and the 30% in terms of the market capitalization. So that implies that clearly foreign investors, they think of South Korea capital market is relatively reliable market, even though they shuffling and change the portfolio of the invested products, but still they maintain some reliable 38% of a portion of investment in Korean market. So that is very good news, and because South Korea's economy has been regarded as very stable. And also, what may cause this kind of the unprecedented high score of Kospi index is not only foreign investors, but also the Korean investor who has deployed their investment in the foreign market, and I think they may begin to come back to Korean market again. Of course, in domestic investors, they begin to realize the gain, but we have to see how it will be played out for the next several months. But I believe that considering the current trend of the Korean economy and relative stable inflation rate, which has been hovering around less than 1.7%, then what we need right now is Bank of Korea's must decrease the interest rate to reinvigorate and to support the recovery of the Korean economy again further.
Thank you for that analysis, Professor Song. Now, let's also touch upon fiscal policy. So the Lee administration has proposed a 728 trillion won budget for next year, maintaining an expansionary fiscal stance. But with the national debt now exceeding 1,300 trillion won, how should the government strike a balance between short-term stimulus and long-term debt risk? Professor Song.
I'm sorry. I thought you were asking Professor Shin. And currently, the short term and the long term, actually, I prefer, because in the long run, the biggest threat against the Korean economy is some kind of a precarious situation in the U.S. economy, U.S. political and economic situation right now, as is shown today is on the newspapers headlines is the death of the far rightist conservatist politician or influencer in the U.S. So that means that there is a clear, very vivid crackdown and fault line between the Republicans or some the Donald Trump supporters, and on the other hand, some more prone to progressive supporters. So that is a really currently very biggest and uncertainty caused by the political division within the U.S. And that means that there is some uncertainty about the investment which will be made by Korean companies in the U.S. soil, such as the recent incident that occurred in the Savannah in Georgia, and LG Ensol company and the Hyundai Motor Car battery companies. So this implies that the all foreign investors who consider some investment in U.S. soil, particularly Japan, they might think again, and they must reevaluate their investment policy and then tariff and the trade policy with USA and other European countries who consider very lenient against the Donald Trump's very strong urge to enforcement of their tariff against the European unions. So that is going to be a very favorable to maybe China and some other Brazil and other economies and India. So to that regard, we have to keep the balance and also adjust some kind of international trade portfolio. So I think that is a long-term risk. I mean midterm or upcoming years risk, and in the short term, I don't think much risk is ahead of us right now.
Now, let's look beyond domestic policy now. The administration faced tough external economic conditions from the start, including trade friction with the U.S. But the tariff deal, cutting the rate from 25% to 15%, was seen as a diplomatic and a trade breakthrough. Professor Shin, what kind of economic impact could this easing have?
Well, we believe, up to a few hours ago, that the President Lee's visit to the United States has achieved one important kind of, thing, that is, the government, the two governments has agreed to, lower the reciprocal tariff from 25% to 15%. That was one of the most important achievement that we were believing that. But a few hours ago, the Secretary of Commerce, Harry Lutnick, said that it might go up to 25% if Korean government does not sign, the intergovernmental agreement. So there's one very important risk pop up a few hours ago that the reciprocal tariff could go up to 25%. That is one thing. And the second thing is, nobody is talking about Section 232 tariff, which is a national security tariff, which is the 50% on the steels. And the U.S. government has been threatening, the global world that, they're going to raise the Section 232 tariff upon, automobile and very strategic, kind of materials like, the copper and everything else, and also the semiconductors and the pharmaceutical products. So this is not, in 100 days, we have to celebrate it, but this is far away from, being complacent. We have to face a lot of, risks and the challenges, especially from global front. So I emphasize that so far we made a success in agreement between the United States and Korea, but that I think is in the wake of kind of shaking, in the sense that reciprocal tariff could go up from 15% to 25%. I think that is the most important development for the last few hours.
Right, it definitely seems to be a very important and concerning situation. Then amid this kind of risks, Professor Song, what's your opinion on this? What kind of steps could be taken by South Korea to manage these kinds of risks?
Yeah, as Professor Shin has mentioned, this is a substantial risk. And just I read a report about Howard Lutnick has mentioned that if the South Korea and the other countries do not immediately sign the contract, and then there is a dramatic increase of the tariff. So to that regard, it is immediate and a very imminent threat, and uncertain. The crisis may be started because of that. But I think we have also currently a leverage is because we have promised to make an investment in the U.S. soil and build up the facilities and the manufacturing companies and train the less skilled workers in the U.S. So that was clearly shown, exemplified in the current a week ago crisis that occurred in Savannah in Georgia. That tells us that actually President Trump has asked Korean workers to stay, but actually most of the Korean workers refused to stay in the U.S. So they came just hours ago. They have arrived in Incheon right now. So all this story tells us that we still have a leverage to be used against the U.S., which means we have $350 billion to be used for the training and the building some very advanced factories, such as advanced factories in the semiconductors and shipbuildings and the second battery facilities. So that is our leverage. Then our companies and our government must think of some other plan B or option is just accept. One option is to accept the tariff rather than building the facilities and make an investment, but then end up with losing everything because of the Trump administration has been defeated and changed, and then Trump administration cannot keep their promise to support Korean workers or Korean companies, and they demand too much percentage of profit of the almost 90% or 95%, or this fund could be used for pay back the U.S. government deficit or debt. That is beyond imagination. But actually, that if that happens, we have no way to control it. So to that regard, one option should be, rather than building facilities and dispatching the workers to train the U.S. Less skilled workers, just produce and those advanced products in Korea and sell them in the U.S. just with a high tariff. Then, as a result, our companies may end up with reduction of revenues, but we could sell them in other countries which do not impose the tariff. So, to that regard, strategic thinking is needed. This is a very risky and balancing activities and balancing policy is needed to find always some options to overcome the crisis because of the U.S. administration's capricious mind.
So accepting the tariffs and expanding reach elsewhere could also be an option. But we've touched upon this incident in Georgia, the detention of Korean nationals there. Professor Shin, what kind of, how might this actually affect, future Korean corporate investment in Washington? And what kind of response could be needed from us, our government?
Well, yeah, before talking about that, this has become very clear that $350 billion, agreement between the two countries is not completed. Korean government has not signed. Right. Whether that is a strategic, decision, I'm not sure. But it is very clear that the two countries has not come up with the final agreement regarding trade. That is pretty clear with this incident. And definitely Korean investment to the United States will be delayed, because of technical problems of visa, and also, the disappointment on the part of the Korean people, including Korean government and authorities. So it is going to be very difficult for government, very difficult for Korean firms, and very difficult for Korean people to engage in investment in the United States. And the United States has to realize that, because of the detention of 300 some people, it has become very detrimental to the future relationship between the Korea and the United States. That I think is one of the most important lessons that we've learned with this 350 people. 50 people's detention in Georgia.
Mm-hmm. So it's a very complex situation indeed. I'm afraid we'll have to cut our discussion right here. But thank you so much for your thoughtful insights, Professor Shin.
My pleasure.
And Professor Song, of course, we really appreciate it.
Good evening to you. Thank you.
And that'll be all from us on Within the Frame tonight. Be sure to tune in again next time as we continue to explore the stories that matter. Till then, stay informed and engaged.